of following China closely for best part of 35 years, for the first time in the whole of that period, I'm not sure if I fully understand what their game plan is. And one of the things that I've found easy, relatively speaking, compared with other countries over the past 30 odd years is I kind of thought I knew what China's policy reaction function was and what their real underlying economic strategy was. But if you look at a lot of the indicators that I've learned to follow over that period and find reasonably reliable, they're all very weak. And a lot of it appears to be a combination of external negative factors and the whole geopolitical challenges facing China, but also because of deliberate efforts domestically to indirectly weaken growth to try and control the role of certain sectors. And it's quite a high risk strategy. I've always thought China was very good at managing the risks surrounding various potential negative developments. They'd respond very quickly and diminish them. But they've actually brought in more themselves because on top of all of this, of course, it's coming at a time where their demographic curve is turning down. So I think China is headed for structurally an era of softer growth than we've experienced, but they've compounded it by some of the measures they've adopted. And now you see the response that they're having to ease monetary policy. And I wouldn't be surprised if they end up having to ease fiscal policy, because otherwise growth is going to be too weak ultimately to have this sort of subtle interplay and linkage between the population accepting the autocracy that the country has, so long as it keeps making many of them wealthier and wealthier. And at the moment, we're seeing the first signs economically that that's at risk. So it's important that they do respond monetary and fiscally, in my view.
Interesting that the central bank, to your point about the potential need for fiscal support coming through, or certainly from Beijing's perspective anyway, that right away the central bank saying that it will not resort to flood-like stimulus. Yeah. So clearly they are trying to send the message that they're not going to just flood the market once again with a blanket stimulus. But I mean, is it possible that that is where we head?
Well, it does seem, if you wade through all the sort of various messages and developments, it does seem, not contradicting what I've said, that there's an effective toleration of weaker overall growth with this focus on wanting so-called better quality, fairer distribution of the benefits of growth. And with it, you touched on the Evergrande headlines before, almost acceptance of trying to punish and highlight the particularly indebted parts of the economy, which itself implies they're trying to slow the rate of debt development, which suggests we're headed for a strategically weaker period of growth in China. But as I say, it's great in principle, but as we find in other parts of the world that we're more familiar with, including here, when countries embark on some big structural developments and it results in adverse cyclical consequences, they end up having to respond by stimulating the economy more than they plan to do. So the message is pretty clear from the PBOC in that statement, but it might well be that they have to change their view pending ongoing developments going forward.
Well, Jim, for years, the fate of the global economy was so closely linked to the fate of the Chinese economy. Yeah. But over the course of the pandemic, there has been a little bit of divergence, with China falling out of sync with the rest of the world and with emerging markets specifically. How do you think about the correlation between Chinese GDP growth and growth in other emerging markets now?
I mean, it's very interesting. I've read a couple of pieces in the past week exactly on your theme, where it suggests there's a new mood that weakening Chinese growth isn't so bad for the world. But to be honest, I find that a bit hard to swallow. And I'm generally one of the world's optimists, but China's marginal positive contribution for the past 20 years has been so huge. It's pretty hard for many economies that export more to China as a result of the past 20 years to not suffer if China's going to continue to have softer trend growth. So I get it means that the marginal positive growth will come from other places. India is probably the one that individually most important there. But again, bringing it back to the structural issues facing most of the big Western economies, Europe, for example, unless we could really develop some big domestic European economic stimulus, they are dependent, by and large, particularly Germany, on exporting to elsewhere. So it's pretty hard to see how we can sort of persuade ourselves that China can have its own problems and slow down and it won't matter for the rest of us. I find that a bit hard to believe, to be honest.
Well, in terms of the new variant and the impact it may have on China, and I think this is important, just given the links that you just outlined. So far, they've had this zero COVID policy since the initial outbreak came through. How is that strategy going to hold up in the face of a variant that is, so transmissible?
Yeah, no, I think it's yet another challenge they've got. And you can see, as let's say we finish year 2 of COVID, the countries that have had that zero tolerance strategy, primarily in Asia, whether it be China or New Zealand or Australia, we've seen the weaknesses of that strategy grow as the year's gone on, because unless you're going to permanently disassociate yourself with the rest of the world, that in itself has its own negative consequence. And as you've just highlighted, particularly with ones that are more and more transparent, it's virtually impossible to keep it out. So